A very good afternoon. These are the top business stories live from the Sky Newsroom. We'll have the latest from the New York Stock Exchange, where incoming President Trump has rung the opening bell after being named Times Person of the Year. The European Central Bank slashes its key interest rates in a bid to boost economic growth across the continent. Prime Minister promises to override planning blockers as the government announces its housing overhaul. Plus, pricey coffee. Find out why the cost of your favourite hot drink is spiralling as the commodity hits an all-time high. Very good afternoon. Business Live with me, Darren McCaffrey. Thank you for your company on this Thursday afternoon. And we're going to begin with Donald Trump, who has once again been named Times Person of the Year. He's also become the first president since Ronald Reagan to ring the opening bell at the New York Stock Exchange a little earlier. Well, our colleagues at CNBC, Jim Cramer, managed to grab a few words with Mr. Trump. Let's have a listen in.
You're going to see some very good days ahead. A lot of incentives are going to be given. You saw yesterday a $1 billion investment, and we give you very fast approvals. Nobody's come up with that one yet, although it seems pretty simple. I think you're going to have some great days ahead. We have to conclude a couple of bad wars that are going on. A lot of bad things are going on, but we'll get them done.
Do you think that we are in a situation where business will be far more embraced under you than currently?
Well, I don't want to really knock current, but I will tell you more than at any time, anywhere in the history of our country.
Now, we used to speak together about the idea that the averages mattered and were a good barometer of your performance. Is that still the case? Can we go beyond Dow Jones, maybe to NASDAQ?
Well, I think I've always said, to me, stock market is all of it, all of it together. It's very important. It's an honor to be here at New York Stock Exchange. I sort of joked that I actually bought the building across the street because the stock exchange was here. It's a big deal.
40, it's a nice building.
40 Wall Street. So, look, we're going to do things, I think, that haven't been really done before. We're going to be cutting taxes still further. As you know, we got it down to 21%. We're going to bring it down even below that. You pay 21 if you don't build here, and meaning your product or whatever it is you're building. And if you do, we're going to try getting it down to 15%. But you have to build your product, make your product in the USA.
And how about every working person who's watching would love to be able to see dividend tax maybe much lower, capital gains much lower?
Well, we're going to be talking about that, and we're really talking about lowering taxes. Last time, as you know, we took it probably from close to 44, 45% down to 21. Everyone said that was impossible. Now, it was always I really wanted to get it down to 15, and we'll be able to do that. And if you remember, we had the best 3 years in the history of our country from the standpoint of the economy. And you've been so professional and so good. I haven't seen you so much since I've been a politician.
Well, thank you, sir. We were together, and I was grateful to be a judge on The Apprentice. We had a great time.
That's right. You were a judge. He was a tough judge. He was a tough judge.
Well, we had to eliminate some people who didn't cut the mustard. You made me a hatchet, man. I respect that.
Yeah. Well, we're going to be doing the same thing, I can tell you. Unfortunately, there's too many of them. But I think we're going to really incentivize the country to go back and work, and they will be incentivized. They're going to do well. People are going to be very happy. JD is very much involved, and I have a great partner right over here with our First Lady. People love our First Lady, and we're going to do something very special. We have some great people up there. You saw some of the people on the cabinet, and we have some of the most successful people in the country, and we're dealing with the most successful people, and those are the people that put others to work. And we're going to be hitting job numbers. And as you probably heard me say, we picked up, since just the election, $3 trillion in, you call it worth or value, but $3 trillion was picked up since November 5th, so that's pretty good.
There you go. That was President-elect Trump speaking to our colleagues at CNBC a little earlier, having rang the New York Stock Exchange bell a little earlier. We'll be talking about President-elect Trump in just a moment, but we also want to talk about what's happened here in Europe, or at least in Frankfurt, because the European Central Bank has now cut its interest rates by 25 base points to 3%. The move was expected, but economists forecast that 2025 could see a faster pace of monetary loosening. It comes as economies struggle as Europe teeters towards a recession. Well, let's go to Frankfurt, where the ECB meeting did take place, and speak to Carsten Brzezowski, who's chief economist at ING Europe when it comes to the Eurozone. Very good afternoon to you, Carsten. This is the fourth reduction we've seen since June. I think interest rates are now at the lowest level since March 2023, but it was expected.
Yeah, good afternoon. Yes, it was expected. And I have to say that the ECB somehow still hasn't made up its mind what it really wants to do. Is it still continuing to fight the old fight, namely against inflation? This is why I think they are still so gradually reacting. Or do they really want to fight the future fight? And that is against too weak growth. So if they really want to tackle the weak growth issue in Europe, they would have to cut faster. And I think that's going to happen in 2025 when the ECB will realize that it's currently still too optimistic about the Eurozone's growth outlook.
So fundamentally what you're saying is that actually this is a battle not now necessarily about inflation in the Eurozone, which has been struggling with over the last couple of years, but about bringing about growth given the trouble particularly we've seen in the country where you are, Germany.
Indeed, and it's not only Germany. When I look at France now with the political woes there, this is also going into some kind of stagnation. And the ECB, of course, rightly so, because they missed all the inflation when it was on its way up. So therefore, they are still trying to fight the last bit of inflation, but they are overlooking that there is a clear risk that the Eurozone economy will not recover because we have this political instability in Germany. We have political woes in France. We have President-elect Donald Trump, who might, with his economic policies in the US, tariffs, tax cuts, deregulation, clearly also harm the European economy. So I think there is a high risk that the Eurozone's growth outlook is pretty depressing for next year. And this would require the ECB to cut further.
And Carsten, what is the mood then, because there is political instability as well. We know there's going to be an election in Germany next year. Is the mood in Europe quite depressed at the moment? I mean, it does seem, and you spelled out some of the headwinds there, and also, of course, there continues to be uncertainty about what may happen in Ukraine. It does feel that Europe is very much in the doldrums at the moment.
Yeah, it is. The funny thing is, it's not extremely depressed because this is a kind of new crisis. So this is not a severe, short-lived recession. But what we're experiencing right now in Germany, but also in other European countries, is this gradual loss in international competitiveness. This gradual loss in economic prosperity. So this is a kind of slow burner, which I think is only gradually getting to people, getting to politicians. So therefore, don't see this as a severe crisis currently. It is a growth crisis. It is a competitiveness crisis, which also makes it harder for politicians to react. I think, at least in Germany, talking about the upcoming elections, I think the awareness has finally grown that Germany needs to change, that there need to be structural reforms and investments, and I hope that they will be coming after the elections.
Yeah, indeed. It almost feels like it is a longer-term, more fundamental crisis, if you like. Carsten Bezeski, thank you very much indeed for joining us there from Frankfurt. Thank you. OK, well, let's have a look at the markets in full now. And US stocks have slid as investors digest a hotter-than-expected producer price rise reading for November. Tech shares, in fact, declined, including Nvidia, losing more than 1%. Here in Europe, as we've been hearing, the big news was that ECB decision to cut interest rates for the fourth time this year. In London, the FTSE closed slightly up, but on the whole, largely unchanged, just up 0.12%. Let's have a look at the currencies. And the pound was down a chunk against the dollar today and also against the euro. And finally, Brent crude has given back some of its recent gains today with a barrel down 1.28% at $72.57. Well, let's speak to Lindsay James, investment strategist at Quilter Investments. Very good afternoon to you, Lindsay. Let's start, if we can, with President-elect Trump. Time person of the year, maybe that isn't a surprise. Is it a surprise, though, that they seem to love him on the New York Stock Exchange? He got a rapturous reception today. They're expecting to make a lot more money next year because of the incoming Trump presidency, aren't they?
Well, that's right. I mean, I think we've seen a lot of people really changing their tune towards him in recent weeks, perhaps trying to curry a little bit of favor before he's back in the White House. He went through a quick reminder of some of his core policies in his speech, particularly around taxes, talking about the corporation taxes coming down to 15% for those companies willing to bring their supply chain back on shore, and retaining the 21% level for the other businesses. That was, of course, due to revert back up higher in 2026. But this adds around $5 trillion to the US fiscal deficit in the run to sort of 2035. So pros and cons for business as they're going to have to digest the impact of that as well.
Pros and cons, but also, I mean, you could almost physically see him lapping up the adoration today. If you look back at those pictures, I mean, he really was soaking it all up. I mean, interesting that, this is a man who rails against kind of big establishments, particularly the media, but also looks for validation from them. Just in terms of those traders and in New York, what do you think? Because he is a New Yorker, isn't he, I suppose? So he kind of feels that this is his home, if you like.
Yes, he does. However, let's not forget that New York is not a state that has been a traditional supporter of Donald Trump. I think as well we have to consider the fact that he's bringing in a Treasury Secretary who is well liked on Wall Street in Scott Bessent. Now, there have been a few concerns about Scott Bessent's suggestion that the Fed might want to have, there might want to be a shadow Fed chair, which effectively undermines the Federal Reserve. Now, Jerome Powell said in recent days he doesn't think that's likely. I think that's something that the stock market would be more concerned about, were there to be more traction in that story. But at the moment, yes, he's keeping the market on side with his policies, with talking up US growth in the next year. But US growth has done 2.8% this year, so I don't think President Biden should be too disappointed with that either.
Yeah, I mean, it's been an engine of growth, hasn't it, the US economy, under President Trump and President Biden. And it is a threat, isn't it, to other countries. I'm thinking most notably, having listened to Trump just then in that CNBC interview, to countries like Ireland, particularly if the US gets really competitive when it comes to tax. Countries that have built effectively their economies on a low tax basis.
Yeah, that's right. And I mean, this is going to impact many industries as well as other countries. When I think about oil and gas, for example, in his comments, he was talking about trying to boost supply, boost production within the oil and gas sector in the US. Now, that's going to have an offsetting effect to other countries that make a lot of money from oil and gas. The oil price is currently around $69 a barrel in the US. The break-even point for drilling a new well is about $64 a barrel there. So, it's not all good news from those factors. And there'll be countries in the Middle East that are looking at that and thinking, hang on, this is suddenly getting to be a lot more of a competitive environment. And we've had the comments in Europe as well today talking about the risks of broad tariffs. So certainly it seems a case that at the moment, where America might gain, other parts of the world are paying the price for it.
Indeed. And let's talk about Europe if we can, and actually more specifically here at home. Are we now an outlier when it comes to interest rate cuts? We've seen the fourth this year from the ECB. And yet it seems unlikely the Bank of England are going to follow suit and the interest rates here will be higher for longer.
Well, I think we might see actually a little bit of change coming through next year. We've seen inflation come down, it hasn't come down as much as it has in Europe, and that's been one of the reasons they've had to hold off. And of course, the recent budget, some argue, would be inflationary as well. The OBR pointed out that risk to it. But at the moment, the market's only pricing in 2 or 3 rate cuts in the UK next year. I think that's a little bit conservative. I think we're going to see service inflation coming down, and that's been a major driver of overall headline inflation. And that's because I think there's going to be less pressure on wages over the next 12 months. So I think we might see a little bit of catch up in the UK over the next 12 months, which will be good news for mortgage holders. OK, Lindsay, great stuff as always. Thank you very much indeed, Lindsay James there. Well, next this afternoon, we're going to be looking at planning and the government's plans to override planning blockers. It's a bold move, but a promise from the Prime Minister if he looks certain to make his housing pledge a reality. The biggest overhaul in planning rules for decades is part of Sir Keir Starmer's plan to build 1.5 million new homes during his time in Downing Street. The shake-up will see councils given mandatory targets to deliver a total of 370,000 homes a year in England. They'll also have to be ordered to review their green belt and identify lower quality so-called grey belt land that could be built on.
But any building on Greenbelt land will need to comply with new golden rules, meaning developers must provide community infrastructure, for example, nurseries and GP surgeries. Well, let's speak to Christopher Patterson, who is managing partner and deputy head of planning at the real estate advisor Bidwells. Very good afternoon to you, Christopher.
Good afternoon.
What is your initial thought on this plan? It's bold. Is it bold enough?
It's bold for what it is. So what we're looking at is a substantial increase in housing targets. We should have been building 200,000 a year since the early 90s to keep pace with population growth. Been well below that and far off the 370,000 target, which we haven't come close to since the New Towns programme of the 1960s. So that shows you the scale of the challenge. That's the first point. The second point is tackling the throttling of large areas around London and other conurbations, thanks to the Green Belt. People talk about the Green Belt as if it's sacrosanct. It was there when we didn't have universal plan coverage and we were at risk of development spreading out into the countryside. That's not the case now. Green Belt is not necessarily high quality land. And what it's stopped happening is local authorities planning effectively for the needs of their local communities in Greenbelt areas. And what the reforms are now doing is making local authorities think more strategically about meeting the needs of their local populace. So we'll see planned development in the Greenbelt. This is not about unleashing housing across highly valued landscapes. That's not going to happen through these reforms. So we're quite excited about it. It's proper planning.
Proper planning, but the problem, I suppose, is that even with proper planning, the fundamentals maybe of NIMBYism, if you like, concern amongst people who live in certain areas, isn't going to go away, is it? Or do they just need to see these houses built and people move in and actually everyone then just kind of moves on?
These reforms are not enough on their own, so there needs to be other reforms. There has to be a streamlining of the system, and I think Keir Starmer and Angela Rayner have talked about that, so there's more to do. But what it does mean is we have local authorities who are now, rather than arguing over the level of housing that they should provide, it's actually been very clearly set out for them now. So what that has happened in the past is you've had local authorities dragging their feet in some cases with local plans, sometimes local plans failing, local authorities objecting to other local authority plans. It's created a lot of waste of taxpayers' money, and it's held back the development industry, and house builders have had to spend more money on planning rather than building homes for people, and that increases the cost of housing. And I think it also upsets local communities. It's driven voter patterns. And I think we've got clarity now. So I hope that whilst it doesn't resolve the concerns of NIMBYs, what I would say to local communities now is think about how you can engage with these reforms creatively. Look at your community. What is your housing need? Who's vulnerable? Who's young coming through needs a house? What infrastructure do you need? Why don't you come forward and say, this is what we want, and engage with the development community? And you'll find that many are willing to listen.
OK, Christopher, great stuff. Thank you very much indeed for joining us there from Bidwells. Thank you. OK, you're watching Business Live. Going to take a quick break. Up next, though, this is an important subject. Affects most of us. Why is our coffee getting so expensive? Well, I'll explain it all in just a couple of minutes.
What's it like doing this kind of stuff when he's not here?
Yeah, I miss him. He just inspired me to be a better person. He's shown us what living looks like in the toughest and most difficult of circumstances.
I'm Greg Milam, and I'm Sky's Chief North of England correspondent.
Mandatory evacuation, you must leave!
For many people, Harvey is far from over. People here believe the water will be this deep for weeks. I've reported from around the world and around the UK. It isn't what politicians see from election battle buses, but what ordinary people see from the buses that shape the timetable of their lives.
I feel like there's no trust between the people and the politicians.
Labour's going to get in definitely, and they're no better than the Conservatives.
It is almost impossible to predict where these fires will go next. Ida has certainly left its mark on New Orleans.
It just feels heartbreaking.
Cartels in Mexico are flooding America with the drug. We are standing on the supply line right into the heart of America's opioid crisis. just gives you an idea of the strength of those winds, strong enough to bend and twist metal. Sky News, the full story first. Christchurch has been changed forever by what happened here.
There was a river of blood coming out of the mosque. That's a scene that you don't forget.
Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who made accusations, Sir Philip?
Can you go away?
Very good morning to you all. Morning.
Do you regret the tweet, Gary?
There's no sign, publicly at least, of either side being willing to give ground. Brianna's dad told Sky News what he thinks of them.
If I'm honest, I hate them. They're just evil. They'll always be monsters.
Free wherever you get your news. How do you reassure the public that all of these mistakes wouldn't be made again?
God forbid we should have to do this again.
Jubilation in the streets, while some emotional.
This is a political victory for Prime Minister Modi and his Hindu Nationalist Party.
I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
Companies like these are helping India in its trajectory to be a serious player in space exploration.
Sky News, get the full story first.
The most significant day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle.
Why only in America?
People want their country to work.
You want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
Jubilation in the streets, while some emotional.
This is a political victory for Prime Minister Modi and his Hindu Nationalist Party.
I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
Companies like these are helping India in its trajectory to be a serious player in space exploration.
Sky News, get the full story first.
You want to talk business? Meet me in the On Board Lounge. Fly Emirates, fly better.
Welcome back. Now, you've probably noticed that your coffee has and is going to get more expensive. Yes, as beans hit a record high. Why? Why is that? Well, let's speak to Steve Wateridge from Expander, who joins us to explain why our coffee is getting more expensive.
Good afternoon. Yes, it's all down to problems in Brazil with the weather. Basically, we've had a succession of poor crops that's associated with climate change in Brazil. The coffee growing areas in Minas Gerais and Espírito Santo have been warmer and drier for the last 4 years than the previous 10 years. And the previous 10 years were warmer and drier than the 10 years before that. So we're now growing coffee in suboptimal conditions, and we have to pay the farmer more to compensate, and people have to drink a little bit less. That's a function of price.
And it's not just in Brazil. I think there are problems too in places like Vietnam, which also produce coffee.
Yeah, Vietnam and Indonesia have suffered because of the recent El Nino, but that's nothing to do with climate change. That happens whenever we have a severe El Nino. But you're absolutely right. Even the smaller producing countries have suffered relatively poor crops, and as I say, this is the reason we have to see higher prices to compensate farmers and dampen down demand.
And are we looking at this problem getting worse in the sense that, you know, what is this the peak? The coffee beans are at an all-time high, but at some point they'll fall back, or are we just going to have to get used to these prices?
That's a difficult one, because at the moment there are differing opinions on the next Brazil crop. Some are more pessimistic than others. Certainly our view, having had people in the field, is that some of the more extreme crop estimates on the low side are overdone, but we will find out in due course. If they turn out to be correct, then prices will go higher. If not, we may see a pullback, but we still need to pay farmers a decent amount to compensate them for the efforts that they put in to supply the market.
Yeah, it's not good, is it, for everyone? Farmers need to be compensated, but I don't think any of us are very happy with having to pay £3, £4, maybe even £5 for a coffee in the future. But we do like our caffeine here, don't we? Steve, for the time being, thank you very much indeed for joining. Steve Wateridge there, joining us on the accelerating cost of coffee. OK, that is it from me on Business Live for this afternoon. Of course, we're back tomorrow morning at 11:30. Coming up next, it is the very latest with Mark Austin, including more coverage of President Trump-elect, becoming Time Person of the Year. Stay tuned for that at 5. I'll see you again tomorrow afternoon. Goodbye.